Okay, we are back with another episode of Okay and today I'm really excited because you know what? Listen, one thing I learned when I was in Columbus is money can come and it surely can go. Okay, today's episode, I'm telling you the title before I even get into everything. It's Okay and I'm tired of being broke. And I thought of no better person to have on the show than financial advisor, entrepreneur, and co-CEO of Keys to Black Wealth. I have my friend and my personal financial advisor, Brandy Avery, with me. Hey, girl.
Hey, what's going on with you today?
I'm doing well, and I'm so excited to have this conversation because there are so many people I know who don't want to be broke, right? There are so many people who are wanting to grow financially and don't know where to start. And, you know, everybody knows, because I've talked about this on the show, I got laid off. And, you know, Brandy was a guest of mine because it really is important for me to make sure that our community has the keys to Black wealth and to wealth, period. So I wanted to have you on the show to talk to somebody out there listening who thinks that, you know, financial freedom is not an option for them, or may not even know what financial freedom really looks like or how to envision it in their lives. So you were the perfect guest to come on and talk about that. So before we get started, so people know, okay, my girl's certified and ready to go. Tell people a little bit about yourself, your businesses, and then Keys to Black Wealth.
Yes. So first of all, thank you, Leah, for having me on today. I'm so happy that God just really brought us together. Your network truly can help you get to your net worth. So that is a key for you right there. My name is Brandy Avery. I serve as the co-CEO of Keys to Black Wealth. Keys to Black Wealth is a multimedia and edutainment brand. We combine education and entertainment together to be able to deliver our content. And that content is all around helping Black and brown people create, sustain, and transfer generational wealth. And it really started out of frustration, just hearing so many people in the community, so many people just throughout the local community as well as the national community and throughout the diaspora who's just having a hard time navigating the conversation of finance. I got started in this industry well over 15 years ago. My lens starts from hospital finance. I got to see what happens when people get sick and they don't have their finances in order. So formerly, prior to being an entrepreneur, I had the corporate role. I was working in hospital finance at a state hospital here in Columbus, Ohio, where I really got to see what happens when people are not prepared. And that could be anybody, right? Sometimes when you think about finances, it doesn't discriminate, right? Anybody could get sick and be ill prepared. So that's what motivated me and inspired me. Also coming from a background of generational poverty as well. My family was mind poor and pocket poor. So
you gotta break that down in a second.
I'm gonna get into that, but I had to go out and seek this information. They didn't teach us financial literacy in school, so I had to go out and get it. And I didn't become financially literate until I was an adult, and it was a choice that I made. And here we are now. Fast forward to today, I'm a fully licensed advisor, a business coach, and I really teach people how to become fluent in finance, teach people how to understand the language of money and how to navigate these financial instruments that we can use and leverage to be able to set ourselves up financially.
Yes, I love it. Okay, pocket poor and mind poor.
Mind poor and pocket
okay,
poor.
Okay,
right.
okay. Listen, some of us are both. I might be a little bit of both. But no, seriously, I think that, you know, education goes a long way and willingness to learn. I think sometimes people get so overwhelmed in the thought of finance. You start talking, what is an IRA? What is this? What is stocks? What's bonds? What's, you know, ETF? Like, people don't know where to start.
For sure.
So if someone's watching this podcast right now, they just graduated school, they got a bunch of student loan debt, they can't get a job because the job market is incredible. You know, they work in a little part-time job trying to get by. How do people really start to build wealth? What is the nitty-gritty, or what is, in your mind as a financial advisor, the easiest way for people to start to obtain wealth?
Yeah, so I think it's a couple of steps. Number one, it starts in the mind, right? We talked about that here in a second ago, but wealth starts in the mind. Wealth is really attainable to anybody who's willing to go on the journey to obtain it, right? So it's a decision, it's a choice, right, that we all make, that, hey, this is what we want to do. After we make that choice in our mind, we got to get educated, right? Because education is key. There is a lot of financial instruments. There is a lot of information out on the social media world and on these platforms. You got to empower yourself. You got to get educated, because otherwise you're making decisions or you're making choices and you may not know exactly what you're doing, and that could put you in a position that could put you in harm's way versus helping you. So mindset first, getting educated. Now, in that education piece, I also feel like we need a partner, we need a coach, we need an advisor, right? Think about, we use a professional service for a lot of different things, right? If we have a scenario and we need to have some oral work done, right? We're going to go to a dentist, we're going to go to a professional. If we have a scenario where we're sick, we're going to go see a doctor, right? There is a professional. Well, when we're dealing with our finances, oftentimes people don't have a financial education and they don't have a financial coach. So having a financial accountability partner, an advisor, someone who studies this work, right? Someone who understands the market, interest rates. I know we're going to talk a lot about investing here in the future, but someone who understands the conversation, who is fluent in finance, that is a big part of setting yourself up for a successful financial plan. I do want to say one thing, because the internet, the World Wide Web, there is so much information.
Oh, what is right?
There is a lot out there. So I speak to a lot of clients and they'll say, hey, how do I know? Everybody's saying you should do this, you should do that. How do you know a person who is qualified as an advisor? I want to educate your listeners on that. This is a big key. You can go to Broker Check. Financial advisors are public. Check the keys.
Come on, shake the keys. Because I ain't know nothing about it, girl. I just believed you was a financial advisor. Well, amen, and it worked out.
Absolutely. Well, thank you for believing me, but you can verify that as well. And I think that'll help people to prevent from being scammed. I talk to a lot of people and they talk about being scammed out there. They took someone's advice and come to find out that person wasn't even a financial advisor. They just charged them for courses and things like that. There's a lot of things like that going on social media.
100%.
You can go to Broker Check, Google Broker Check, and if they're a financial advisor, you put their first and their last name in there. Like, so if you broker check me, you can put my first and my last name out in Broker Check, and it will come up and it'll show you that I am licensed, what licenses I hold, and it'll also show you if I have any disclosures, or if a financial advisor has disclosures, meaning that maybe they weren't honest in a certain situation. Maybe they had a complaint against them. Maybe a FINRA, which is the Financial Industry Regulatory Authority, maybe they had some kind of fines, like they were being dishonest in the industry. So financial advisors are public, and you can always verify who a financial advisor is by simply going to Broker Check. And I think that's a really big key to be able to protect ourselves.
That's good. I didn't even know that. I mean, again, I think people don't even know the way to actually go about having a financial advisor. I think for years, if I'm being honest, I think for years I've said, like, I want a financial advisor, I want a financial advisor. You know, I had friends that would have financial advisors, or through their jobs might have had financial advisors, but I was just like, I don't know where to start. And, you know, putting your finances and your investments and your livelihood in someone else's hands is a big deal.
For sure.
And so that was a major key. I love that. So let's talk about investing right now. There's a lot of conversation, and to your point, on the internet, even in Brandy and I's personal sessions, there are times that I bring her stuff that hey, I saw this on the internet and they said invest here and this will grow wealth and this is what I can do and I can borrow from it. And, you know, Brandy and I have sat down for an hour and she's explained, okay, you could do that, but here are the pros or cons. Or, listen, sister, that works when you're already a millionaire, but you're not going to be able to obtain this form of blah, blah, blah if you are at the financial point you're at. So I think it's so important to kind of have someone to shift through the things. But if you're telling someone, because we all know realistically, this administration has done a lot to impact our economy thus far.
For sure.
What are ways that the average Joe, the average person, can invest or obtain or work on obtaining wealth right now? Maybe if you don't have a lot, or maybe if, you know, you have other priorities financially that come before surviving are your main financial priorities at the moment. What are small ways that people can start investing, or where can they invest that can help them start to grow wealth?
Yeah, that's actually a good point. You hit on a couple of points. So first of all, the internet and things like that, and taking advice from the internet. Remember, investing is a customized process. It is a customized experience. What works for you may not work for me. So it's about strategy. And I think that people need to understand it's not just frolicking through, you know, the investment, perusing through stocks, and you just putting money here and there. Like, there's a strategy. What are we trying to get to? There's a goal in mind, right? So that's one thing, one concept that I want people to understand, your listeners, that it is strategy, right? It is not just randomly investing, right? There are 3 Ds to investing. So if you are an investor, here's 3 things that I want you to remember. Number 1, 3 Ds is going to be discipline. You got to be disciplined. If you're wanting to take the journey and take the route of being an investor, you got to be disciplined. Number 2 is going to be diversification. I'm going to talk about where people can put their money here in a second, but you want to diversify right? Because you want to grow your investments. You want to try to protect your investments. There's ebbs and flows. There's no guarantees in the market. But if you diversify and have a strategy, then you can protect yourself. And then number 3 is dollar cost averaging, right? And that is an investment concept on how to invest. That is the strategic way of putting your money in the market. And dollar cost averaging basically says, I'm going to systematically invest my money, whatever my budget is, every single month systematically into my investment vehicle, right? And there's a lot of investment vehicles. Now, I like to focus on mutual funds with some of my new investors. Mutual funds is a great way that individuals who may be on a fixed income, they can tap into mutual funds, because you can start putting your money into mutual funds with as little as $25.
So what's a mutual fund?
A mutual fund, first of all, so everybody's heard of a stock, I think, for the most part. A stock is like, I'm going to put my money into one vehicle,
right?
Apple. So let's just say I want to put my money into Apple, right? I put my money into Apple. It's an Apple stock. Well, if Apple has a bad day or a rough day in the stock market, then you're going to have a rough day, right?
And just a disclosure, Brandy has seen all of my personal information. It knows that I went on a kick of, investing in stocks. And now as the stock market crumbles with tariffs and all the things, I lost a lot of money. And, I was like, oh.
Yeah, but you diversified as well. So you recently diversified your portfolio. And now you have mutual funds. Well, a mutual fund is a fund family of companies, right? So versus putting all of my eggs in one basket, in Apple, and not to say stock is a bad way to invest, but you want to diversify the portfolio, right? So you can have a mutual fund where it's like, I have Apple in this mutual fund, I have Amazon, I have Nvidia, right? I might have Visa, I might have ExxonMobil, Procter & Gamble, Johnson & Johnson, right? Just naming some publicly traded companies that typically do well in mutual funds. So it's a family of stocks and bonds, and it's allowing me to be diversified. So going back to my 3Ds, it's a strategy. And then also with mutual funds, I can invest fractions of shares, right? I can put my money into fractions of shares. So if I don't have a lot, if I am a single mom and I just want to still build my portfolio, maybe I want to start opening up an account for my children or something like that. Or if I'm just under income, or maybe I'm just struggling, but I still want to take advantage in the wealth process, I can tap into a mutual fund and I can invest with as little as $25. That is literally cheaper than a DoorDash. There is no excuses here, right? You just gotta want to do it. People are spending money on all different type of things, like all different type of things. You can open up an investment portfolio with as little as $25.
Yeah, it starts there. One of the things that Brandy and I dove into, especially with me getting laid off, was life insurance. I have known the importance of life insurance. I really learned the importance of life insurance when my grandfather died, and how, it played out in different people in my family receiving different things. And I think life insurance is one of those things that we all hear about, but people don't know the power of life insurance and how there's so many different avenues and so many different ways that you can invest in life insurance. And I personally, when I got laid off, I had a life insurance policy with the company that I was at. And when I got laid off, I lost it. And so I had no active life insurance. And so, Brandy worked with me to get life insurance. But talk about that, because a lot of people say that is a key for real that people don't really utilize or know about, especially in our community.
Yeah, so that's such a big point. Life insurance, first of all, when we are structuring portfolios, right? So when we're sitting down with clients as financial advisors, myself and my team at least, what we do is we're building up the financial house, right? So there is a house that we're building, so it's very literal, right? And if you were building a brand new house, let me ask you this question. Let me role reverse. Let me ask you a question, right? If you were building a brand new house, would you put the roof on first or the foundation? The foundation. So life insurance is foundational planning when we're building our portfolios, because some things we have control over and some things we don't have control over. And life insurance is an uncontrollable. When we pass away, we have no clue when that's going to take place. So you got to stay ready so you don't have to get ready, right? So first and foremost, life insurance is uncontrollable. It is one of the instruments that we use when building wealth that we know that there's a 100% chance of utilization of all the financial instruments. Unless you know something that I don't know, right? We're going to get old and then we're going to pass away, hopefully in that order, or you could just pass away prematurely, right? God forbid. However, life insurance is that instrument that there is a 100% chance of utilization. And also life insurance is a very inexpensive way to be able to create wealth and legacy for our loved ones. Imagine everyone in your family. Imagine, Leah, if everybody in your family, all your friends and families had a policy, a life insurance policy. Maybe those policies were $500,000, $250, $1 million policy. Think about the leg of the wealth that would be transferring, right? That's why it's the transfer of wealth. Can we create it? Can we keep it? But then most importantly, can we transfer it? That is true wealth. It's the transformation of it, right? From one generation to the next. So if everybody has a life insurance policy, then we're creating estates, we're creating wealth. And then also life insurance is inexpensive. You made another good point about the group policies. Ladies and gentlemen, we have to get financially independent. That means we're financially independent of a job and of the government. See, we see what the government is doing already. If you ain't a believer at this point, I don't know what else you need to see. You got to be financially independent. Now, those job benefits, keep them. They're perfect. They're incentives for working at the job. So we're not saying that don't do away with your job benefit. Keep it. But there's a reason why that life insurance policy is $3.55.
Right.
There's a reason, right?
I had $1 million policy for $10.
For $10. There's a reason. It's not yours. It is a group policy. It is not yours. You do not own it. And then also a lot of people don't know on those work policies, there are some policy clauses that states your life insurance is not active if you're not on active duty. So if you're on vacation, if you're on FMLA, if you out here traveling, then your life insurance may not be active, right? Because it's just a benefit, right? It is just a benefit. And just like in your scenario, you have a personal testimony. When you left your job, you lost your life insurance, right? Now, you know, life insurance is based on age, health, and habits. So if you lose, say you're at your job and you're like 50 years old and you lose your job. Well, now you're 50, so the chances or the qualifications with life insurance may be difficult for you. So you got to keep a policy on yourself, even though you may be employed. So in addition to your work benefits, you got to own your finances, right? Your life insurance, your investments, they got to be in your name.
And in full transparency, even in my life insurance situation, I wish what Brandy is saying someone would have pulled me aside and told me that, right? Because when I worked for the company I previously worked for, I worked there 7 years. So, you know, I'm 31 now. I was in my early 20s. I think, you know, I was less weight. I didn't have as many health ailments. There was a lot of different things at play that could have, A, made my policy a lot cheaper, and B, would have put me in a better category for life insurance, because all of those things do matter. You know, how you live when you're doing life insurance does matter. If you're smoking and drinking, if you're overweight, all of those things matter. Obviously, I'm overweight, so of course that knocked down what I was able to qualify for. And had I done that 7 years ago, I think, you know, my policy would have been a lot cheaper. And again, I'm willing to pay it because I understand the payoff, but I think it's important for people to know. So if you're young right now and you're listening, if you're in your 30s and you don't have a policy outside of your job, now is the time to get it, because you don't want to look back. Again, of course, no one thinks we're getting laid off. I mean, with the economy's going, a lot of people getting laid off. So I think it's important to stress that is a way for you to help the next generation of people in your family, the people behind you, your own children, you know, do that. Now, one of the things I want to talk to you about, because I brought this to Brandy, okay? I am the internet financial girl. That's why I got, you know, these stocks that's
She got her TikTok PhD.
Okay, YouTube University.
Yes.
And so one of the things that I saw online, matter of fact, Waka Flocka Flame was talking about this. He was talking about how he had learned from a lot of rich white people how they handle life insurance is they use the IULs. And so that is a form of life insurance that a lot of rich people use to pay for things, to borrow from themselves, to be their own banks, right? And so when I heard that, I'm like, yeah, I want to be my own bank. Yeah, I'll do it. You know, I'll do whatever. So I'm like, Brandy, put me down for IUL. And she was like, girl, but you're not rich. Girl, you don't make the money to be your own bank. Like, it don't work like that. So talk about the different types of life insurances and an IUL, because you broke that down to me where I was like, okay, just put me on the regular plan then. Just put me on the regular price plan, because people don't know the difference. So when you're hearing things like that, talk to me about an IUL versus the policy that you gave me.
Phenomenal question. I was hoping you were going to ask me this, all right?
Listen, I'm putting my business on First Street.
Right. And I appreciate your transparency. And we got to have these transparent conversations, because if we don't, then it's just all locked away. Each one got to go out and teach one. But types of life insurance, and this is, again, going back to strategy, right? What works for someone may not work for you. IULs, yes, the wealthy does this, the Rockefellers, well, maybe you a Caldwell, okay? Right?
You a Williams.
You a Williams, right? You a Johnson, right? Now, the key thing with IULs, first of all, Index Universal Life Insurance, right? Who are they for, right? And who uses these policies? What Waka Flocka was talking about, think about his network. Think about his circle and his net worth, right? These are people who's already accumulated and established their wealth.
Yeah.
Who has these policies, and they're really looking at them and position them from a standpoint of taxes, right? So it goes a little bit deeper. It goes into taxes. Now, I'm not a CPA, so I'm not going to go deep into that aspect because, you know, they'll be on me and stuff out there like, she ain't no CPA, I'm an advisor. But we know a little bit to be dangerous about taxes.
Okay, now.
And for the IULs, they're using these from a tax perspective. But these are already the wealthy. So these are going to be the best individuals who qualify for these type of products, or they fit their plan, their strategy better. They already got their 401ks maxed out. They already got their IRAs or their SEP or their traditionals. They've already maxed out these other instruments, right? Now they're using this instrument as a strategy against taxation. They've already accumulated their wealth. So it may be cheaper for me to borrow against myself in this aspect than it is to pay my taxes in this bracket. Well, when I'm just starting off, or if I haven't accumulated wealth, if I haven't hit multi-million-dollar status, then I need a different strategy, right? So our process and our philosophy is term life insurance and investing at the same time. Now, there's a misconception about term life insurance. Some people believe, oh, when my term gets to a term, when it terms, it's going to skyrocket, it's going to go up. Well, not all life insurances are created equal. You just got to find the right term, right? The term policy that I works with, the policy doesn't have to go up, and you can keep the term all the way to age 100. People don't know that, right?
Yeah.
The whole life policies, the whole concept, and the problem that I have with whole life, traditional whole life and cash value is the word borrow. You use that. This is a debt instrument. I have to take a loan out from this policy and I have to pay it back with interest, right? So my concept is, and then also the interest that I'm earning on the money, as the money grows, it's only 2 to 4%. Well, I can just invest in a traditional investment account, and I can find something that's doing a 10% return, a 15% return. I mean, we're dealing with the market right now, and there's still instruments out there returning 10 and 15%. As a matter of fact, since the market has been established in the 1920s, it has never returned anything less than, on average, than a 10%. So I always ask people, do you want a 2% or a 10%? Well, when you're in those IULs and those whole life policies, they're generally giving you that 2 to 10%. Or at 2 to 4%. So you're not keeping pace with inflation, which is one of the reasons why we invest money. So you're losing purchasing power, and then you got to borrow it from yourself, and you got to take it out in the form of a loan. What do you think that interest rate is going to be on that loan?
Crazy.
It's not going to be 2 to 4%. It's going to be over that. So I typically sit on 8%, 10%, 12%, right? You would do better by just keeping your money in a high yield savings account, right?
Yeah.
And then you have to borrow from it. So you have to ask for permission. You got to write a letter. They can say no. They can decline it. It's an overpayment of premium is what it is. That's why whole life policies are the most expensive. The interest rates are really low. You got to take it out in the form of a loan. So it's a debt instrument. If you do not pay the loan back, they will subtract it from the policy in a traditional whole life policy. They will reduce your death benefits, right? So that means that you took this out for your kids, your legacy, but now you're taking out loans from your products, your policies, right? I always recommend my clients, you never want to convolute your investments and your life insurance together. They are two separate instruments. They need to remain separately because they have two different roles. And then also often with traditional whole life policies, there is no TOD, meaning that the contract, it says it right there, the only way you could take out this loan is if you're alive. Well, and if you're not alive, you can't take out the loan. Well, who keeps the money? The life insurance company keeps the money, right? So you could just a different strategy, and by tweaking the policy, we recommend traditional investment accounts. I recommend a traditional investment account. There's all kind of things that you can put your money in, and then also you keep the money. You don't have to ask for permission. It's not a debt instrument. I am anti-debt as a financial advisor. That is my philosophy. I'm anti-debt. I am pro-wealth. And I'm not looking to get my clients into more debt. I'm looking to help my clients become debt-free.
Amen. Amen. That's funny. You talked about debt-free. I was actually going to ask, what were your thoughts on Dave Ramsey? You know, speaking of the internet, he is a sensation on the internet.
Yeah.
The debt snowball method.
Absolutely.
I've taken his course. Now, did I follow the course? Amen. No, probably not. I don't have as much debt as maybe some other people, but what are your thoughts on that? Because I've heard people argue on the other side of the coin, you know, when you want to invest, especially in things that are not like what we're just speaking about, real estate or something else, you need credit. You need credit. And so what are your thoughts on his methodology and the debt-free mentality and, you know, when you're also chasing trying to be an entrepreneur or, just gain wealth in other ways?
Man, that's such a loaded question. And I know a lot of entrepreneurs and just people who's in the game, students of the game, they struggle with that one, like debt and credit and what should I do first, or just how can I leverage credit?
Yeah.
So I feel, number one, I like Dave Ramsey. I do. Dave Ramsey actually got his financial education from my brokerage. So we kind of have some of the same philosophies. Now, one of the questions that I always get as it relates to debt and investing and just getting all of my finances in order is, what do I tackle first? So let me start there, first of all. Sometimes you got to do it all. Sometimes you do have to do it all. Now, debt is very vicious. And what I've experienced, and I've looked at thousands of portfolios, debt is very vicious. Debt is preventing people from economic prosperity. It is crippling people. It is causing depression. It is causing heart diseases, aneurysms, broken relationships in the family. So when I look at these real cases, these real clients, like, I am anti-debt. That's why my positioning is anti-debt, because until you can get to a position where you can manage and control and leverage the debts, right, which is what we'll talk about that here in a second, then you got to protect yourself from debt. It is very vicious, and it is literally preventing people from economic prosperity. And I see it. And this is not just an opinion. This is real life people who are struggling and crippled with debt.
Yeah.
That's first key, right, with debt. Debt, think about interest. Interest can compound for you, and it also can compound against you. So that interest rate on those debts, that can compound, right? And it can grow. And now that $5 that you spent for some toilet paper, or that $10 that you put on your credit card, is now $50, right? And it could keep compounding. So debt is very dangerous. The average person that I work with, they are literally being crippled by debt. Now, let's talk about the other side of the coin. You can leverage credit to be able to build other income producing assets. And if you're gonna get in the credit game, I suggest that you start there. How can I leverage credit to be able to produce more income for myself? For example, real estate, right? You talked about that. If you use and choose real estate as a wealth building instrument, which most wealthy people, they have real estate a part of their portfolio. We know that. But you got to be responsible for it, right? You don't want to overextend yourself. You got to have a strategy, right? If I'm utilizing credit, right? Maybe mortgages and things like that. That's another strategy. I just got to have a strategy with it. But just willy-nilly using credit to just swipe away to go get gas and all of that stuff, that's not how you leverage credit to build wealth. You leverage credit to be able to create other income producing assets. And if you're going to leverage it, I feel like that should be the way that you do it.
Okay, that's good too. Because I know a lot of people, I have friends who are like, okay, I put everything on the credit card and then I pay it off, trying to, again, leverage the credit. So that's a good point. I also wanted to ask you this, because you have been in this business for over a decade. You have Keys to Black Wealth, which is an annual conference where you drop keys in the community and people can gather. I was there this year, and I met so many incredible people with different keys and different ways to build wealth. But one of the things that our generation and social media is encouraging is, you be your own boss. You be an entrepreneur, girl. You got it. And what people fail to realize is that, it takes more than just wanting to start a business. And I've had to learn that the hard way. I created Plus Paradise, my body positive travel group. And the first year I lost thousands of dollars trying to create this business, right? And so, and then of course I get laid off a couple months after, and I had a savings at the time. But then when you have no income, it's like, damn, that cost a lot more than what it just actually cost. So talk to me about what you're advising people when they want to start businesses, and how to create a business in a way that's financially responsible. What are some tips you would give people if they're trying to go into a business and they're using their own savings, their own money? They don't have bank money. They're trying to get it out the mud. What would you advise someone who wants to step into entrepreneurship?
Yeah, so first of all, we're going to shake some keys for you for having an emergency fund, because the key word is our sister here. She's not just about it, she's doing it, right? She's not just talking about it, she's actually doing it. You had an emergency fund, right? You have an emergency fund, right? So first of all, you got to realize people have to make the decision if this is what they want, right? It's okay. Everybody doesn't have to be an entrepreneur. And sometimes I know that's so big right now in our communities. Oh, own your own business, be an entrepreneur. And if that's in your spirit, if that's in your passion, if that's what you want, if that's your calling, then go for it, right? But if it's not in your spirit, if it's not in your passion, if it's not your calling, then that's okay, right? You could be a corporate baddie. You could be the best of whatever it is that you want to do. So entrepreneur may not be for everybody. Entrepreneurship may not be for everybody. But for those of us who wants to take that journey, understand that it is not for the faint of hearts. It is not. Entrepreneurship will test your whole entire gangster. It will test your gangster, right? There will be ebbs and flows. It is just like the stock market. It is no guarantees, right? It's going to be some good days, and it's going to be some days where you're questioning your whole entire sanity, right? But I think it starts with the bare basics, right? Having a plan, right? Everything is about having a plan. A lot of this is predictability, becoming wealthy, building wealth, becoming financially independent, starting a business. It's all predictability, right? So you got to have a plan of action. I like to use a lot of basic resources with my early entrepreneurs. Go to SBA, the Small Business Administration.gov. That is a great site. They have business plan templates on there where you can pull them up and just put together a business plan template. I talk to a lot of new entrepreneurs. They don't know their numbers, don't know the financials, haven't done any market analysis or market research. That is critically important. Like, people are creating things without even knowing what the market is asking for. So you can't skip over some of those important steps, because that's when it gets costly and financially costly. You're going to pay for those mistakes. It may sound good, but just because your friend want it, or your two girlfriends want the products, or your homeboy are willing to support you, is this something that can scale, right? You have to be able to test scalability when you're going into entrepreneurship. Otherwise, you will get burnt out real quick.
Yeah, you driving down my lane, because I think, for me, when you're doing something that you believe is your passion, it's a lot of passion. But to your point, and when I realized I really didn't know what the hell I was doing, when I started to get really overwhelmed with Plus Paradise last year. I really started to start to feel, I'm like, ooh, this is a lot of money that I'm investing, and then when people aren't buying or purchasing, then you're like, ooh. And I was like, you know what? Great idea. I'm going to start doing grants, because grants love to give to black women, business, minority, so I start getting on these grants. And when you're doing grants, I see where there's grant writers. Yeah. Because there are people who are equipped to answer these questions. They start asking, Skip, your number, I'm like, I ain't made no money. I don't know nothing about this. I don't know what the market, the differentiate. I knew none of that. And that let me know, like, I was not really in a place to scale this, or to even ask other people for money to scale this, because I really didn't know what the hell I was doing. I just knew, okay, I'm a plus size woman. I want to create safe spaces for plus size women, and it'd be great if I could make money along the way. Yeah. But to your point, entrepreneurship comes with so much more. I actually have a friend, it's called Everything Legendary. Shout out to him. He, the way he makes vegan burgers. He started in the DMV. He started slinging these vegan burgers at his mama's house. His mama had high blood pressure, cholesterol, diabetes. And he was like, I want my mom to eat healthier, but I want her to enjoy it. So he starts making these burgers. Burgers real good. He starts growing it. Turns into a food truck. Now he's slinging it, driving around the DMV, slinging these things. He ends up going on Shark Tank, and he gets a deal. And so he was like, but one of the key things that people don't see when you go on Shark Tank is there's a due diligence period where all these investors need financials, need everything that they're going to be investing in to make sure they're going to give you their money, right? There's a whole process after we see the deal and the show. And he said, what I want to encourage Black entrepreneurs to know is starting a business is not simply just selling something.
It's not.
He was like, because I had to get all of my ish in order to even get the money that I went on the Shark Tank asking. Because, this was just something that grew overnight for me. It was not something that I sat down with a financial advisor, sat with the CPA and made sure. He was like, as long as it was making me some money, it was cool. And so I think about that all the time now, even when I think of all the money that I lost with Plus Paradise, because the passion for the business didn't die. But the way that I tackle how I'm going about this business definitely changes.
You got to turn those passion into profits, and figure that out. And along that journey, we're going to shake the keys for that one. Turning the passion into profits, and what's the process, in between.
Yes, I love that. Okay, well, listen, Brandy. I need you to give me 5 keys. 5 keys to leave my listeners with. If they are trying to get through this recession, maybe make a little money off of it, what are 5 keys you would suggest to them that can really ensure that they leave this next 4 years, this next term, in a better position than they're in right now.
Okay, cool. So I got some 5 keys, no particular order, but I'm gonna drop them based on where I feel like we are in our economy right now. Investing. So let's talk about that real quick. So a lot of people are scared and fearful of the market and what's happening in tariffs. Listen, there is nothing new under the sun, right? We have seen so many different scenarios as it relates to the market. A savvy investor knows that this is where the people make the money right now, right? So don't be afraid of the market. Get with a financial advisor. We are in a bear market right now. Buy low, sell high. This is the perfect time. My financial advisor friends and the people around me, they just dumping money in the market right now, right? So follow the people who have the education and the knowledge and understand that this is a unique opportunity, right? It is not the time to panic right now. It is the time to prepare and prosper. So that's my first key, right? Don't be afraid of the market. Just be strategic, get with an advisor, and take advantage of this opportunity. My second point would be financial education. I cannot stress that enough. You got to get educated, get yourself around a group of masterminds, people who do this work, who they understand what's happening right now before you make decisions. Even if you're excited about investing and things like that, there's so many people who's excited about so many things. Got to get educated on that, right? Education is empowering, and it will prevent. It's a preventative measure for making a lot of financial mistakes, right? Then my second piece is educate our children, right? Educate the young people, the people around us. Listen, there's 3 phases to investing, right? Phase number 1 is accumulation phase. That's 18 to 55 years old, right? So as soon as we know about investing, we should be teaching our young people because they can have a different start in life, right? So those 3 phases, 18 and 55, that's accumulation phase. The second phase of investing is going to be protection phase. That's 55 to like 65, right? You're getting ready for retirement. And then there's the retirement phase, which is distribution, and that's retirement or 65 plus. So getting our young people involved will help prevent and break some of those generational cycles of poverty. We want to introduce cycles of wealth, right? That's my third key, get the young people involved. So we got investing number 1, get educated number 2, help our young people get educated number 3. Secondly, be mindful of debt. What I am seeing right here with debt, I think it is so critically important that we manage our debt. And then also remember, I don't care what people are saying out here, cash is king. Okay, period. Credit is queen, critically important. You got to have both in your tool chest, but at the end of the day, you can't even pay your credit cards with a credit card. You got to pay with cash. In some cases, you can't even pay your rent with a credit card. You have to pay with cash flow, right? So don't get it twisted. Even though credit is critically important, it's an instrument that can be leveraged. You got to keep your liquidity up, right? We're talking about liquidity, cash flow. So cash is king. So that is going to be my 4th tip. And then my number 5, my 5th tip is you just got to have an open mind, an open spirit, and an open heart right now. Be open to being poured into. It starts in the mind. It starts in the mind. You can't just take the internet for face value. You got to educate and empower yourself, right? And I think that it all starts in the mind, right? Like I said, wealth is readily available to anyone who is willing to forge the path to be able to obtain it, right? And that truly starts in the mind. You gotta want it. So those will be my 5 tips.
Come on, 5 keys.
Keys for that.
Listen, okay, I know, Brandy, there are several people listening to me right now who need your information, who need to know how to get in contact with you. Let everybody know where they can go to get more information, where they can get their own keys, and more importantly, their own session with you. Where can they go?
Yes, I appreciate that question. So oftentimes people say when they reach out to me, I'm so surprised that you responded. You know, people, I don't know what's up with these business owners not responding. Baby, I'm an entrepreneur. I'm going to respond.
On the hustle.
Reach out to me directly. And then also, this is my ministry as well. This is my passion. God gave me this gift of understanding how to speak this language and also to be able to give it back to my people. So it's a part of my legacy. So reach out to me. I'm on all the social media platforms. Slide in a DM. That's super easy. Brandy Avery. And on IG is Brandy Nicole with a K, Avery. LinkedIn, IG, Facebook. Look me up as well. I'll drop my email as well. It is Brandy at Keys to Black Wealth. Keys to Black Wealth, exactly how my shirt, that's KEYSTO, Black, BLACK, Wealth, WEALTH.com. So Brandy at keystoblackwealth.com. And then also, you can hit me directly on the bat line. It's 614-900-3444. Again, 614-900-3444. And just reach out to me directly. So I'm out there, I'm accessible, and let's work. Let's get to this bread.
Do people have to be in Columbus, or can they be anywhere?
I work in all 50 states and also U.S. territories.
Okay, so hit her up. Listen, we got the lemonade stand and the OK Anders everywhere across the country. So utilize my girl. She is helping me get my finances in order. And I felt like it was super important for her to be on the pod to tell people how to get that money on in this little recession. You feel me?
Let's go.
Well, I appreciate you for stopping by, Brandy.
Thank you so much. Take some keys for Leah.
Okay, yeah, listen. Hey, Keys to Black Wealth right here on OK. And listen, you can download, you can subscribe, make sure you like this, share this with somebody, hit us up on social media. You will see us there. But we thank you so much for tuning into another episode of OK And.